Good morning, or almost good afternoon. I want to thank Sydney for giving me the opportunity to speak today. I'm very honored to do so, and I also want to thank Vince Molinari with WISA, because he really introduced me to Sydney and is giving me this opportunity to give. This is the first time I've publicly spoken about my experience in working on the Jobs Act on Capitol Hill. So let me just give you a little bit about myself, to give you some background. I'm currently at Paul Hastings of Counsel in the Fintech and payments practice, but I'm also starting up their government affairs practice. In terms of my background, I grew up in Pennsylvania, I always like to say. My parents were those swing voters that you always hear about. So my mom was a Republican, my dad was a Democrat, and I always say that our dinners were heated both figuratively and literally. And we used to come to Washington, D.C. on vacation from Pennsylvania. And so I got the bug to come to Washington and work on Capitol Hill. I've spent 15 years on Capitol Hill in the House Financial Services Committee, and I worked on the Senate Banking Committee twice, with the last time being with Senator Toomey, where I worked on most of the Jobs Act. And I've also worked in the private sector for Chrysler. I was at Chrysler during their bailout, the second bailout. And I also started up Quicken Loans lobbying shop in Washington. Most of what I'm going to talk about today is going to be my experience with the Jobs Act. And I'm hoping to leave some time for question and answers at the end, if I can get through this quickly. And the other thing I want to say is I've been involved with almost every single piece of major financial services legislation over the last 20 years. So going back to Gramm-Leach-Bliley through to the Jobs Act. I always like to proudly say that I was not one of the drafters of Dodd-Frank, and I was not one of the drafters of Sarbanes-Oxley. So I think everyone woke up on January 20th of this year, and we were like, okay, the world has dramatically changed, right? We have a new president. Things are just going to change, right? But what I'd like to say is, in the financial services world, it's not totally changed, right? Because, yes, the Republicans have the majority in the House and can easily pass things in the House, but not so easy in the Senate, right? So let me tell you, I'm going to talk a little bit first about the history of the Jobs Act, because I think it's important in terms of going forward and being able to get things done going forward. So it really all started for me when I went to work for Senator Toomey. He came to me with an article that was on the front page of the Wall Street Journal. It was on April 11th. I started with him on April 1st, and the article was about raising the shareholder limit. He pointed at the article, and he said, I want to get this done, and I want to get this done for all companies. That was, from that day on, I was kind of involved in the Jobs Act. I had people come into me and ask me to do what's now called Reg A+. It was the biotech industry and the National Venture Capital Association. I said, I'm interested. It was a little cryptic for me. Most of my background was in banking. I said I wanted to be bipartisan. And so what happened is I was hearing about the House bills that were passing in the Senate. Senator Toomey was very much saying, listen, I don't want a message. I want to get things done, so I want the bills to be bipartisan. Little did we know that we were going to build something that was going to create a lot of this industry, and it's awesome to see all of you here today talking about the legislation and how it's being used. So from then, what happened was tried to work on these bills very hard at first to get that bipartisan buy-in that was needed. But Senator Tester was holding a hearing on capital formation. My boss said to me, what's going on in capital formation? I said, Senator Tester is holding a hearing. We're not on a subcommittee, but I'm sure he'd love you to go. We went. After it was over, I met with Tester's staffer, and Toomey coincidentally met with Senator Tester. This shows you that bipartisanship does exist in some realms, right? And we got together and we decided the easiest thing was going to be to do Reg A or Reg A+, which now, who knew that it was going to be, the SEC had told us it was not scary but meaningless. Clearly it's not meaningless, it's done a lot. The second piece, I then became known as the capital formation staffer in the Senate. And I was, the IPO task force came to me with their proposal for the IPO on-ramp, the emerging growth companies. I loved it because I knew it was something where the accounting industry would not oppose it because of the relaxation of 404B, and we were really talking about true startups. I said, I love this. I want to do it. Senator Tester's office was, listen, we don't think he can be with you on this one, not because we have a problem with it, but Senator Tester is up for re-election, and this is a little too Wall Street for him right now. The main drivers on the IPO task force were really, it was very much the National Venture Capital Association and the New York Stock Exchange were the major players. Also, Latham and Watkins worked with Joel Trotter a lot on that language. In the meantime, my boss, who had told me I want to lift this shareholder limit, I was already hearing from folks like Vince Molinari, the private trading share platforms, Barry Silbert at Second Market, from some of the startups. But I get a call from the Philadelphia Chamber of Commerce, coincidentally saying, hey, we saw your bill was on this bill to lift the shareholder limit for banks, and we have a company that's very interested in this. I said, oh, are they a bank? And they said, no, they're not a bank. And I'm like, well, that bill won't help them, but we want to do a bill that does it for everyone. So it turns out that company was Wawa. Now, who in this room doesn't like Wawa, right? I mean, it's like an oasis when you're going to the Jersey Shore, you're going to the beach, right? You're like, see a Wawa, you gotta stop, right? So it turns out that Wawa, Wegmans, everyone loves Wegmans, W.L. Gore, the company that makes Gore-Tex, Quick Trip Sheets, all these Main Street companies that have a heavy presence in Washington, they wanted the shareholder limit lifted because they were either family companies or they were old companies, and they had stock ownership plans, etc. So from there, we decided on that piece, since W.L. Gore, which makes Gore-Tex, was headquartered in Delaware and had a plant in Pennsylvania, and Senator Carper and Senator Toomey shared the Philadelphia media market, we decided that we were going to work with Senator Carper. And that was a very wise decision because Senator Carper, I would say, played a leading role in terms of Democrats that got the Jobs Act done in the Senate. On the IPO on-ramp, we were trying to find someone to work with on that one as well. The New York Stock Exchange said, Senator Schumer would like to work with Senator Toomey on this. I said, really? I'm like, I don't think Senator Schumer even wants us to have our seat in Pennsylvania. They said, no, he wants to work with you. I'm like, okay. Once we knew Senator Schumer was involved, we knew that we had a shot of getting this done. And it was a surreal moment when I stood there at our press conference with both Senator Toomey and Senator Schumer talking about, the IPO on-ramp and how this was going to make it easier to raise capital, make it easier for companies to go public. So we moved each of these bills along. The shareholder limit bill by far had the largest coalition because we built up a bunch of private companies who wanted to go public, many of them who had a heavy presence in Pennsylvania, or I'm sorry, both in Pennsylvania, but in Washington as well. Each of these bills, I worked bipartisan and bicameral. So either it started in this House and we copied their version, we copied the Reg A+ bill, or it came from the House, so the IPO on-ramp, or Senate, the IPO on-ramp came from the Senate, and then the House matched to us. So this is very unique. We worked on a bicameral and a bipartisan basis. A couple pieces of the legislation kind of came along with the package. Cantor rolled all the package together, and we were able to hold off amendments, and that's how the thing became law. Reg D, really the hedge funds wanted that, but were very quiet, kind of took a ride along with the rest of it. On the crowdfunding piece, a lot of people are frustrated with Title III of the Jobs Act, and the reason that I would tell you that the crowdfunding piece didn't come out maybe as well as it could have come out was because crowdfunding was a very young industry. It was not organized. The people that were coming in to see me were not speaking with a unified voice. And that, when you coupled that up with the fact that you had members fighting over who was going to get the credit for the bill, that was a problem. So in the House, you had McHenry that was working on it, but in the Senate, you had Bennett and Merkley, and you had Scott Brown. And Scott Brown was in a seat that was a tough seat. He lost, but we wound up, caving into the Scott Brown version, which was considered the moderate version. So that's why Title III turned out the way it did. It was also all of us that were involved with working on the Jobs Act, the parts that were really moving and had coalitions, we considered that to be the only retail piece of the Jobs Act. I have to be honest, we didn't know that the SEC was going to interpret Reg A+ to apply to retail investors. I'm okay with that, though. I'm very happy that it turned out that way, and so I say that as a good thing. We also didn't know that the SEC was going to interpret take the ban on getting rid of the ban on solicitation and then make it harder to determine who an accredited investor was. That was clearly not the intent of what we were trying to do. So the overall intent of the Jobs Act was to make it easier for companies to raise capital either privately or raise capital to go public. We each passed the same bills, and we went, it became law. We had a Rose Garden signing. The SEC, a week before it passed in the House with Obama's support, a week before we're supposed to pass it in the Senate, the SEC opposes the Jobs Act on almost every single front. But the momentum was already there, and so the Jobs Act became law. So it's a lesson in how to get legislation done. So I'm going to now talk about the current environment and sort of how do you get things done when it seems like probably all you are thinking, Washington is just so broken and it seems so dysfunctional. How do you get through that, right? So let's talk a little bit about the dynamic now. So as I said, we all woke up on January 20th thinking the world has changed, right? A lot of people really scared on January 20th about the changes, right? But in a lot of ways, in financial services and in the world hasn't totally changed, right? Because you got the House majority, things can pass very easily in the House. But in the Senate, 60 is the magic number. You need 60 for cloture in the Senate. You need 60 to move forward in things in the Senate, and that's for legislation. And Republicans do not have 60 in the Senate, so it's not easy to move something in the Senate. Then let's talk about the executive branch and what's going in the executive branch. So you've got the NEC, you've got Gary Cohn over there, and you've got the Treasury Department, and you have a lot of those slots being filled in. You have Mnuchin over there. Even though those are considered, kind of top-line bodies when it comes to financial services, both of them are, I worked at the Treasury Department, and those are essentially, they do not have any regulatory authority except for FSOC, a little bit of TARP. So they're really just they're think tanks that put ideas out there. So what we're really watching now is the financial regulators, and that's where the action is going to be. In this, so yesterday, the OCC, it was announced there's going to be a replacement. But the good news is, in this particular space, you've got Clayton was just confirmed on Tuesday. So there is, a lot of opportunity in this space to get some things done, because there are parts of the Jobs Act that the Congress didn't need to do. Like, it could have been done by the SEC. So most of the action is going to, there's going to be a lot of action in the SEC. So let me just talk a little bit about the House real quick and the Senate really quick about what's going on in those committees. So in the House, you have the Financial Choice Act. It's a very aggressive piece of legislation in terms of, taking apart parts of Dodd-Frank. It also has capital formation provisions in it. A very difficult bill to get passed, but still worth watching because it sets the precedent. The agencies are watching it. It sets the precedent for the things the agencies may do or some parts of the Financial Choice Act may get spun off. There are pieces that are bipartisan. In the Senate, you've got Sherrod Brown, and you've got you got Senator Crapo and Sherrod Brown, the chairman and the ranking member. They've both solicited ideas from the industry and other interested players and trying to work on a bipartisan basis. How much the two of them can agree to remains to be seen. It may be more in the community bank space and in the regional bank space, but also very difficult to get major legislation done. So where's most of the action going to take place? So most of the action is going to take place in the agencies. And you're saying, you're telling me that? You're starting a government affairs shop? Somebody comes from Congress, you tell me most of the agencies? Yes, I say that, but the important thing that needs to be kept in mind is that when it comes to the agencies and it comes to Capitol Hill, the relationship is symbiotic. So every time you walk into the SEC or the OCC or not Treasury because it's not really regulator, but any of these agencies, right, the FDIC, every one of those meetings is a political meeting. So when you're on the Hill, so for instance, when I was with Senator Toomey, and this is going to be true now with this new administration, you are spending a lot of your time sending letters over to the agencies, either to get them to take a position on something in a way that you want, or you're sending those letters maybe to get your issue to the top of the pile. You're requesting meetings with those agencies. Senator Toomey, we met with all the agency heads to have relationships with them. Sometimes the agencies, they want to do things, but they want the cover of Congress. So they're coming to us and saying, hey guys, will you write a letter or do a hearing to give us cover? And then the last thing that's very symbiotic, and it's so clear in the SEC, it's the best example, is people that work on the Hill, a lot of them wind up in these agencies and they come in and confirm slots. So the SEC is definitely a really great example because Mike Pilar at the SEC, he was on the Senate Banking Committee working for Chairman Shelby when I was working for Senator Toomey on the Jobs Act. So he was reviewing everything that I was working on. And Kara Stein, who's over at the SEC, she was working for Jack Reed, who was our main opponent of the Jobs Act. So the relationship between Congress and the agencies is one that flows back and forth. A lot of people see regulation and Capitol Hill as two separate things. They really aren't. In terms of like moving forward on legislatively and within the SEC, I hear a lot about, so I'm going to talk about things moving forward. I hear a lot about Jobs Act 2.0, or I hear a lot about McHenry Fintech bill, those kind of things. What I would suggest is there really needs to be a rebranding. I came into the Jobs Act as an outsider to securities law. I was really a banking law expert. I came in and I had visions, and my colleagues, we talked about this, I had visions of trading pieces of paper on Wall Street. So we really need a securities law, we need a modernization act to really get with the times. And that's something the SEC can work on with the Hill and with experts like all of you in this room. There are other possibilities of doing rifle shot bills that are those are considered very small bills. Those bills that are rifle shots, you never know if they're going to be a rifle shot or go on something else. But when you build them, you want to build them in a bipartisan and bicameral basis. So some of the bills that are being mentioned today, I was looking them up really quickly, even if they pass the House by 435, if they're not bipartisan, it won't move in the Senate because everything has to be bipartisan. You also want to make sure that you're working within the committee process. So for instance, you want to work with ideally a bipartisan member or two that are on your committee of jurisdiction, which is usually House Financial Services and Senate Banking. You want to make sure you're not going to leadership and having leadership telling the committees what to do. Because Paul Ryan is a big believer in delegating to the agencies, and Paul Ryan is very close with, for instance, Jeb Hensarling. Those types of rifle shot bills, the way they tend to move in the House and the Senate, this is maybe like inside baseball, but just to give you a sense, they typically move by suspension, which needs a 2/3 vote in the House. It's an expedited way of moving something. In the Senate, they go by hotline. I don't know how many people are familiar with hotline. Probably most of you aren't. It used to be a telephone call. Now it's an email that goes around. It first has to be approved by the committees of jurisdiction and the leadership, and then it goes around. And if nobody stops it, it passes the Senate. Sometimes you run them to see who's going to stop it, so you know where your problems are. You may also see some small changes in must-pass bills. So if you get something that's bipartisan and bicameral, some of the must-pass bills are, flood insurance has to pass this year. Approps bills and CRs and those kind of things have to pass this year. NDAA. So those are other ways of getting things done. And then the last thing is, again, I'm going to reiterate that you want to work on a bipartisan and bicameral basis. And ideally, you want to work with the rank and file members of your committees of jurisdiction. Because when you're working with the leadership, it's much harder to get a bill done. So McHenry is a wonderful champion for Fintech and for the industry, and he wants to be involved, but we have to make sure that you're involving the members of the committee because he's on the committee, but he's also a member of leadership. It's harder for a member of leadership on either side of the aisle to get a bipartisan bill. Lastly, I would just say engage. I mean, a lot of you are new or you represent startups, etc. And there is going to be movement in this area through the SEC, through Capitol Hill, and that symbiotic relationship. And many of you have heard the saying, if you're not at the table, then you're probably on the menu, you may be eaten for lunch, and that's very true. So a lot of these fintech companies, the larger industry players have a very heavy presence in Washington. So at the very least, you need to be watching to make sure that you don't get thrown off the bus. So that's all I have to say. If there's any time, no time. Okay, so I'm out of time. But if you want to pull me aside, I can answer any questions.
Exactly. Thank you very much for insight.